Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, I want to circle back to a conversation that we had, I believe it was last week, where you outlined some of your research that had shown that gold stocks typically bottom 1 to 2 months before a Fed rate cut, or the first Fed rate cut. And you know what? It's been very interesting. The last 2 weeks, we have really seen a strong move in, let's just look at GDX or GDXJ. Could be a potential bottom formed here, at least a short-term bottom. But I think that also ties into now rate cut expectations for July. So about a month and a half, almost 2 months, that the Fed will be cutting rates. So maybe the gold stocks are sniffing this out. You care to update us on some of your thoughts regarding this bounce, the nice bounce we've seen in the gold stocks, at least some of the gold stocks, or the bigger ones especially, and now the expectation for a Fed rate cut in July?
Yeah, Corey, well, simply put, it looks like right now, or at least this morning, there was a 74% chance of a rate cut in July. And I think a week ago or so, I was thinking, it's either going to be September or December. And now the data is basically saying it looks like it's, September's a done deal. It's more likely than not now that they're going to cut in July. And based on that 1 to 2 month stat, if you just think about the way that they've been moving in the last week or so, that we had that 3 days of really strong rises. I mean, that kind of move is, if it's sustained, that tells us more likely than not that they're probably going to be cutting in July. I wouldn't be surprised if they cut in June, actually. I think that's still on the table. So it's interesting, and I started looking at all this Fed data and how gold stocks perform, and before the Fed was going to cut, I mean, this is around the time where we were thinking, have they stopped, have they paused or not yet? I was looking, and it could generally take a couple months after the last rate hike is when they tend to bottom. So I mean, it depends on the data you're looking at. It fluctuates, but again, most of the time there's a bottom 1 to 2 months before they do the first cut. But there also can be a bottom like a couple months after their last hike. And so it looks like gold stocks actually bottomed slightly before that last hike in December. But of course, recently they've made a higher low, and that's, probably going to be the bottom in terms of the Fed rate cut that's coming. So, look, I mean, this is something we've been talking about, I think, for over a year, Corey, and it now looks like it's going to come to pass probably by the end of July, that meeting. And, gold stocks typically perform well, and gold as well. They perform well after the cut, not just right before it happens. So this is a fundamental ingredient that's been missing for the sector for several years. So I think we definitely have to be bullish from here until year end.
Now, isn't it also regarding the moves after the rate cut, what the expectations are? Whether this is a one and done probably won't have the same impact to the upside for the metals as a consistent expected rate cut. And even though the market now is even pricing in, I think 2 rate cuts by the end of the year, that could be the major driver, a key driver too, after just that first rate cut, isn't it?
Yeah, and I think the market actually is expecting, you said 2 by the end of the year. I've heard that. I've also seen people saying 3 by the end of January. So, I mean, that's 3 rate cuts in the next 7 or 8 months or so. So that's, I mean, if they have to cut multiple times, that's significant. If they just cut by 50 points and then just did nothing for the next 6 to 9 months, depending on what the stock market did, it's difficult to see, if just a one-time cut is enough to start a real bull market in precious metals. I know we'll get into that a little bit later, but I mean that to me is really that's the question now. Are we? And this is something I wrote about. Are we going to see a real bull market begin in precious metals, or is this just another rally? Is it just going to be a move like 2016, or even a fraction of what we had then?
Now, when it comes to the potential of a real bull market, is it all about simply breaking out of that overhead resistance that's been in play for 6 years now, maybe? About 6 years, that about 13, let's say 1370 or even up to 1400. If it breaks 1400, would you declare it a new bull market for gold?
Well, the technical analyst in me would say, yes, gold breaks above that. It's in a new bull market. And I do think that that's more likely to happen than not. But my concern, Corey, is that let's just take a step back. There's never been a real multi-year bull market in gold without gold outperforming the S&P 500. Now, the 85 to 87 cyclical bull, that's kind of an exception to that, but the dollar went down 50% during that cyclical bull market in precious metals. So that's why that happened, even though precious metals weren't strongly outperforming the stock market during those years. So how the gold to S&P 500 ratio acts, how the stock market performs, that is going to tell us, is this just a rally? Is this just a temporary move higher that can last 6 or 9 months? Or are we seeing the start of a real multi-year bull market? And look, if the stock market, if they cut a couple times and the stock market stabilizes and it's able to go to new highs and the economy stabilizes, in that scenario, it's hard to see gold going into a real bull market. It's just not going to happen if the stock market avoids recession and the market and economy stabilize over the next 6 to 12 months or so. That would not be a good outcome for precious metals. In that scenario, I still think that gold stocks would perform really well because gold is more of the anti-stock market than gold stocks. But in that scenario, I mean, I could see gold going above 1400, but then not, again, the measured upside target is 1700. So it is possible gold can break out, but it gets to maybe 1475, which is the 50% retracement of the entire bear market. Gold could break out and run up to that point and not be able to get above it. And then, based on the retracements, you can say, oh, well, it's still, it hasn't been able to recover more than 50% of the bear market losses. So that's a scenario, that's a potential scenario where we do get a breakout in a great move, but it doesn't turn into a bull market because the stock market doesn't roll over, the economy doesn't roll over. However, if we're in the scenario, Corey, where the stock market is rolling over, we're going to have a bear market that's at least 25 or 30%. The economy goes into a recession, and they have to cut rates for more than a year, and they have to go down to 0 or 0.5% again. In that scenario, you do get a new bull market in precious metals, and in that scenario, I do think in the next couple of years, you'd see gold, rally back to 1900, the all-time high again. So in either scenario, Corey, I'm bullish and I'm optimistic for the rest of the year, but it's too early to tell if this is, going to turn into a full-blown bull market in precious metals, or if it's just something that's going to, pop higher for 6 or 9 months and then fade as, the economy recovers and the market stabilizes. I can't see the future. I'm not an economist, so I don't know what's going to happen. Hopefully, these scenarios can help people anticipate what could potentially happen on either side. Because if we step back and just think, okay, this is it, gold's going to go to 3,000 in 3 or 4 years, and we can just invest in optionality plays and invest in options. That to me would be a little dangerous right now when you don't have the proof yet that a real bull market has started.
Hey, Jordan, just because you're not an economist, they don't even know how to predict what's going on, especially in this crazy world that we're living in that's still dominated by tweets and trade wars and, quite frankly, stuff that just is not, no one's able to predict what is coming next. But if we might still not be in a full bull market for the gold sector, it's just too hard to tell, and so much depends on what goes on in U.S. equity markets and in the U.S. economy. How are you investing your money in the gold sector?
Well, what I've been looking at for the last couple months is basically I'm not really considering metals prices when I'm investing in something. So I may have one optionality play. I'm not sure. I'd have to look over what we own, but I may have no optionality play. So everything I own, I think, is really viable at around these levels of metals prices. So I think that's, as a precious metals investor, that's how you want to invest. I mean, my own expectations now, I'm thinking, I have been holding too much cash for a while, and so I'm putting more of that to work. But I'm putting money into things, be it producers or exploration plays, companies that are just viable at current metals prices. So I'm looking at the just the company, the business, the potential to add value, whether it's through production growth or exploration, and those things are right now more important to me than metals prices. But that being said, in my mind, I'm thinking, and anticipating, more likely than not, I do think we're going to see gold break the wall of resistance and trade into the 1400s. I just don't want to be a full-blown bull where I'm thinking about, yes, this is going to 1900 in 2 or 3 years from now. I'm not at that point yet, but I'm at the point where, look, in this sector, we do need to put cash to work. We should be, close to fully invested now, and we should look at things that could do really well at current prices, and will do even better than that if we see 14 or 1500 gold.
All right. Hey, Jordan, some good comments there. I appreciate how you're looking at these markets and not getting too emotional even after this rebound, but it is very encouraging, and things are definitely starting to line up in terms of rate cuts and in terms of U.S. market weakness, but the jury's still out. It's not a full-blown bear market for U.S. stocks. It's not a full-blown bull market for gold stocks, but there definitely are some opportunities, and just look at where the gold price is. Sold off a bit today after a nice run in the morning, but it is still holding nicely above 1300, well above 1300, and the trend is our friend, at least for right now. Jordan, great chatting with you. Everyone, click that link below. Go visit Jordan's website, The Daily Gold. Check out his free content, and so consider subscribing for his paid service. Thanks for your time, Jordan.